I'm sitting here with Mr. Chris Griffith, and we're demonstrating to the rest of the world that brokers and retail can get along. We're back again. It's Tuesday of the MBA annual conference, and I'm sitting here with Mr. Chris Griffith, Fear the Beard. He is, and we're demonstrating to the rest of the world that brokers and retail can get along. Like, we're sitting down having a cup of coffee between two, I'm going to call them ficuses because between two ferns is already taken. So Chris and I have just been sitting here chatting, and Chris, you have a special affinity for, well, you've got an affinity for all consumers, for all homeowners that want to come and use your service. We do too. So we definitely share that in common. You've got a lot of programs and a lot of expertise, a lot of different programs available for just about any kind of unique situation. We've got the same thing on our retail side. But I think one thing that, and I think that's kind of one common out, or several of our common themes that we've run through is, but you take things to a different level because of your engagement, your influence on social media. Tell me a little bit about Vetted VA, because you're a veteran. You served in the Marine Corps, right?
I did, yeah.
Okay. How many years were you in the Marine Corps?
Just shy of 8 years.
Just shy of 8 years.
Yeah.
All right, excellent.
Well, he almost got tackled. That would have been great.
That was your first body check opportunity. But anyway, so you were in the Marine Corps for 8 years, and so when you got out, did you immediately jump into real estate?
No, well, I got into real
mortgages?
estate. I grew up a framer's son, so
Okay.
I got out, moved back home. My stepfather and mom had built a spec house. It hadn't sold for 2.5 years.
Sure.
I moved into it to get it up to snuff because no one had been in it, and helped them finish kind of building a company that buys apartments.
Okay.
So I led point, found, underwrote, negotiated, and it helped to build out ultimately what was a 232-unit acquisition in Sherman, Texas, on an apartment complex. Really cool. After
Nice.
that process, my stepfather, a broker's broker. I mean, he's full deal now.
Uh-huh.
So I don't, David, I love you, man, but broker's broker type. And when I say that, I mean my affinity for the broker channel. You know where I came? Like, you have an event that occurred, say 10 years ago now, where they were like, there was a pillow. But the problem is, brokers are like the cockroach of the industry, and I don't mean that in a negative way. What I mean is, in a nuclear blast, the only existing organism that'll probably still be here is going to be a cockroach.
Sure.
Because they're problem solvers. Brokers are exceptionally resilient to being, murdered off because they're such good problem solvers. And so I went up to Colorado to help transition his brokerage into mini non-del, right, mini core non-del, and then over to full del, even though I didn't know that's what we were doing in the process. That
Right.
happened a lot, really, mainly because of where the industry was. 2012, what were turn times like if you were a broker?
Long.
Like 8 months, like for an underwriter. It was just ridiculous. So we made the transition. I learned a lot in the process. I created, or I guess I would say I stumbled along on my reasoning. What I found was with our lines, with our processes, which were pure, which were whole, I couldn't definitively say, when I bank this loan, my consumer does better.
Sure.
I could actually definitively say, when I bank this loan, I do better. And so there's an internal angst there. Like, why am I doing this if this might be better, right? And I get models, and I understand and appreciate all that, and I'm not out to bemoan any, certainly.
Sure.
But the problem that I have with that is the lack of visibility that model provided to the veteran. Even in my circumstance, right? As a vet, originating the loan,
Right.
there's just too much behind the scenes. So Vetted VA came about because, like, honestly, I closed a high loan. We closed a loan, some of those loans that were 400 basis points because we're on a retail line. I was a young originator. I didn't know. I thought, hey, we're bank. Hey, we got better rates. This is how it works, right?
Right.
And what I found in the process, at least for us, is that wasn't the way that it worked. So I began to identify and find what I thought were the companies that were, I don't want to say like bad, but the companies that were targeting veterans, overcharging them habitually, right?
Yep.
Were fined because of their continual bad action. But at the same time, because of their prominence in the veteran world and their ad spend and marketing, they were continue to pilfer veterans,
Yep.
right? And that result, the reason why it frustrated me is our entitlement just changed.
Right.
It's more costly for me to use my VA loan now because, not me, not my veteran buddies, but because a bunch of bad banks were taking advantage of a process,
Sure.
right? And effectively, that churning kind of piece was legalized. This legislation appeased the investor, the end investor. They put them into the custom pools over 90% LTV now to make sure the investors were provided for, and the vet carries the burden.
Right.
But they didn't do anything wrong. VA loans didn't start to default. We've been in a declining interest rate market for how many years?
Several.
A couple decades.
Yeah.
Right? It's been coming down for 20, 30 years, and the VA loan has still managed to maintain its risk-averse nature, right?
Yeah.
The reduction in rates wasn't causing this major problem because loans could be refinanced every once in a while.
Right.
So Vet VA was just my way of attacking the problem. I don't like being reactive. I like being proactive.
Sure.
So if I can identify the issues, I like to go after them.
Absolutely. No, it's
The
fantastic.
longest answer in the world. Apologies.
Actually, you'd be surprised. No, it isn't. I can challenge you on that because I tend to get a little verbose myself. Being a former teacher kind of promotes that. But one of the things about VA borrowers is that there's such a lack of education. So a lot of this kind of stems from originators and from the banks. We'll start there since we were just talking about that.
Yeah.
Not educating consumers, and specifically the VA consumer, properly.
Well, and it's because they can't, because they're proper. A lot of these banks have overlays. They're restrictive. Right. And so if they educate the consumer on what they can do, they have to start out by saying, look, you can do a lot more than this, but this is what will help.
This is what we can help you with. Yeah.
And then no one's comfortable saying that, especially if they're a veteran-facing logo.
Of course not.
Right?
Yeah.
So I think that's a big part of it.
Absolutely. So what are some ways that individual LOs can do a better job of, regardless of what their model is?
Right.
What are some ways that LOs can educate their veteran borrowers on the products? Number one, they have to have the product, obviously.
Sure.
But what are ways that they can educate their borrowers on what to look for, and what their options are in terms of finding the right financial mix that's going to benefit them, financially speaking, long term?
Well, I think it starts with understanding what the individual's needs and motivations are for purchasing their house. Are they buying a house they're going to be in for 2 years, 5 years, 10 years? Is this going to be a rental? Mm-hmm. You have to figure out all of I call it the 5 W's, right? Who, what, when, where, why, how, what else, what other. Add those at the end just to make sure they don't have any other real estate that they didn't put on their Schedule E, right?
Absolutely.
But you have to get the full context of what they're trying to accomplish. Too many loan officers out there, guys, too many loan officers are just selling mortgages. They're just selling rates. They're just saying, hey, I can help you. They really don't understand debt. They don't understand the instrument that they're working with and the power that it has. Money concerns past value. Debt, currency, concerns future value. Debt is far larger than money will ever be again in the history of the world until something completely changes, right? Mm-hmm. And so you have to understand that. And when you approach this origination, whether it's for a veteran or anyone else, and you have this mindset that it's, hey, well, this is what we do. Here are our boxes, hop in one that you fit into best. Mm-hmm. You're missing out on a massive opportunity. Homeowners are 80 times wealthier than renters. The census just put that 80 times. And I have friends that are like, oh, you can't use correlation to equate causation. Read a couple studies Harvard's put out.
Right.
They make the best argument towards causation in that scenario than anyone that I've read. And who cares? If I invited you over for dinner at my house, I say, hey, James, if you sit in that chair, you're 80 times likelier to get salmonella than if you sit in this chair. Are you going to hesitate? You're not going to worry correlation or causation. You're going to be like 80 times? I'm sitting over there, bro. I'm not sitting in that one. So.
And next time I come over, I'm bringing the Lysol.
Right, exactly. We have a snake, so, but the value opportunity. One house changed my life. All of this started with a VA loan. I bought a house, 0 down, 332, rehabbed it for 5 years and sold it for 810. Mm-hmm. Right, I'm working on it again now. That started with 0 down, right? With no down payment, I was able to purchase something. I went from 332 to 810 in 5 years.
Nice.
And I'm doing it again now, right?
Fantastic.
And so that opportunity, I truly believe debt in a house is the lowest common denominator to an individual who's never had wealth in America to achieve it for the first time ever. Most people's largest sum of money that they've received to date usually comes from the sale of a house, right? And so I think the originators out there need to do a better job, especially with VA, understanding the root guidelines. We all have overlays. Some of the wholesale lenders I use have overlays, right? Sure. But understanding, like I have a wife and 3 daughters. It works exceptionally well because I know what they like and they know what I won't tolerate, right? Like, we have an understanding there. And so the originators need to do a better job of going to the actual handbook not the RLC, because I get bad gouge from them. They're a good backstop, and I double check it with 2 people. But go to the handbook, read the chapters on it. There are a lot of communities out there too, right? That give and provide immediate answers to those types of questions. Originators that are in vetted VA have that. Brokers are better, that group, that Facebook group.
Sure.
Mortgage professionals, there's a ton of them out there.
Yeah.
But the root starts at the VA guidelines. If they're not starting there and understanding it from that level, and they're teaching from an overlay level, here's what's going to happen. You're going to molest a veteran unintentionally.
Right.
You're going to cause a veteran to not be able to use his benefit as well as he could have, or not be able to use it at all because of the overlays that prevent what you're capable of doing.
Yeah.
So start at the VA guidelines. If you can't do something, don't stick them into a loan that you can. Like, do the right thing. Give it to somebody that can do it better.
Absolutely.
If I have a friend in my market that comes up and says, hey, I got a $4 million jumbo loan I want to do, and I'm a doctor, you know what I'm going to say? Awesome, come over and have a beer, and I'm going to tell you why you shouldn't use me for this loan. Because he's my friend, and he's a doctor,
Right.
and eventually he's smart enough he's going to know what happened.
Right.
And I want to provide the best option each and every time, not
Absolutely.
just what I can do the best. So I think that's where we start, is by looking inward and figuring out, should I be profiting here?
Right.
Should I be accepting this? Like, one of my favorite things about some people are the ones that have the ability to say no right up front. Too few do.
Yeah.
And I think loan officers just have to get back to that, understanding the root of the problem.
Absolutely, and when you have that kind of mentality with your consumers, I think that you will end up winning more deals in the future
100%.
than just going for what's right in front of you.
100%. A consumer wants to be, they want someone.
They want to be educated.
They want someone to be like a fiduciary for them.
Yes.
Let's be real about it. They don't. No one really likes that word. Like, and I understand the difficulty with it.
Right.
They don't understand debt as a currency.
Right.
If debt as a currency, that sentence actually makes them scratch their heads a lot. So I
Right.
pull out $1 that says Federal Reserve note, and I pull out a promissory note, and I show them. Like, it's the same thing, guys.
Yeah.
Right? It's just a different side of it.
Absolutely. Just kind of riffing off of everything that you were just talking about. Like I told you that I also originate as well as run the marketing team here. I actually am in the middle of a deal with clients right now. The husband is active military, and when they first came to me, they said, we don't think that we want to do a VA loan. We're thinking about doing conventional because we have this big chunk of money to put down. And to them was, why? And I said, look, here's the way that you need to think about it. And I walked them through the steps. I said, okay, here are the different scenarios. Here's a 100% financing VA. Here's 10% down on VA. Here is the equivalent down payment options that you have for conventional. Let's forward this out 10, 15 years.
Yeah.
You're still paying less interest overall with the VA. And you also got to hold on to all that cash and leave it invested. I said, here's the question I'm going to ask you.
more valuable.
Yeah, here's the question I'm going to ask you is, can that same chunk of cash that you wanted to put down on this house, can it earn better than 3.5% to 4% over the next 10, 15 years? If the answer is yes, then keep it invested where you've got it invested. If the answer is no, number one, you need a new financial planner. Number two, put it in the house. I said, but I always try and or convince my clients that they need to hold on to their cash and leave it invested, let it go to work for them, and build equity on someone else's time.
Yeah, I agree with you 100% there. I think that, let me ask you a question.
Sure.
You've been in mortgages for a long time.
Yeah.
As far as a mortgage in the United States goes, dollar for dollar, is there anything more efficient than a VA loan?
No.
There's nothing more efficient than a VA loan. It is the best mortgage in the United States.
Yep.
If you're an originator out there and you see this and you think, hey, I found a vet that'd be better served with this FHA or conventional loan, reach out to me. I've seen it maybe once, twice in the situations where VA is not the best. It's only because it's a temporary proposition.
Correct.
And there's a large funding fee.
Correct.
It's a jumbo loan.
Right.
Those are the ones that hit those buttons, right? And so that's the first part of it. We need to, as a community, make sure veterans are using their VA entitlement. That must happen because it makes a huge difference for them.
Absolutely.
In that lane. So VA loan, the most efficient on earth. What would you say? What would you say the? Well, actually, I'm not going to ask that question. I'm gonna roll that one.
Fair enough.
So I do think that it's the most efficient mortgage on earth, and I do think that we need to be putting more people into it. But I think that there are a lot of problems with it that are going to continue to show their faces because of what banks, what retail lenders, even wholesale lenders are wanting or willing or able to do. Right? And so this kind of stuff where we can get the message out, we can talk to people and make sure that they understand what they're able to do. VA FICO, right? FICO score. How often do you run into that question on Facebook? What's the minimum FICO score for a VA? And then you see 620, 580, 640,
and everybody's all over the
720.
map.
It's like, they're originators.
Yes.
And they state it as fact.
And they're in some cases or I would say in most cases it's misinformation. In other cases it might be maybe that's the overlay of their particular employer.
Right.
And so you got to go with folks that are going to give you straight answers that are consistent across the board. So excellent stuff. Great chatting with you today, Chris.
I appreciate it.
And thank you for all that you do especially for veterans, but just for educating the consumer. You're a great follow on social media, and look forward to chatting with you again in the future.
James, likewise, I appreciate it. I appreciate what y'all are doing at Thrive to serve vets too. I know y'all work harder than I would say a lot of others to ensure that y'all are doing the right things. And that's ultimately what this is going to be for. I want this to have value simply because every originator that has seen vets be overcharged, have seen vets be discriminated against outright, have seen vets not have the option simply based off of a person couldn't profit from it. This has got to be a brand that every one of us wears in our heart to make sure that kind of nonsense goes away. That's all I want help with. Y'all are awesome, so appreciate it, James.
Thanks, Rep. All right.